SmartX is the first DEX with a real solution to impermanent loss. SmartX is transforming the DeFi landscape, catering to liquidity providers and smart traders who want to benefit from low fees, farm DeFi highest APRs, and trade effortlessly on SmartX.io.
Good afternoon, everyone. BC Richfield here, coming to you live from a very, very sunny London today. It's just gone a couple of minutes past midday here, making it a couple of minutes past 1100 UTC. A big shout out, as always, to everybody that's making the stream live today, as well as everybody that is going to watch this on recording. It is, as always, brilliant to see so many of you here. So really just want to start the Monday on a positive vibe, really, and say how lucky I am to have, all of you guys here and that we get to spend this time together. And it's just, do you know what? I feel I had kind of a big reset over the weekend. It's been a kind of turbulent couple of weeks for me. And yeah, I think, do you know what? I feel really, really positive. Got a lot of really great stuff happening around the nest. There's some hugely exciting things happening that we've been working on for a long time that we're only just kind of getting to, tell people about now, which is super exciting. But ultimately at the bottom of it all, is this for me, is the education side of things. It's the big kind of passion that I have outside of trading, and a big part of that, or one of the biggest part of that, is all you guys. So a very good morning, my friend Hans and Erica as well. Lovely to see you. Our lovely Kelly Barker all the way from New Zealand. Absolutely brilliant to see you guys all as well. Burned as well. Hello, my friend Whack. How are we all doing? Whack, I think we got a bit of your weather again today, mate. It was I'm going to get my typical British part out of the way first so I don't kind of waste too much time. But we always moan about the weather, or certainly discuss it, because it's so inconsistent, especially in recent years. And yeah, it's just been mad. We haven't really had much of a summer this year, which has just been a bit brutal. So we're ready to rock and roll. There he is. Pisquit as well. How have you been, mate? I haven't seen you for a little while. I hope you've all been fine. Burned, yeah, I saw you kind of nip in and out as well. I know it's difficult. I do try and kind of get this at a time that kind of suits most of the patrons, to be honest. I mean, obviously, apart from poor old Kelly, who just stays up until, basically through most of the night to watch it. But hopefully the daylight saving changes will be kinder, or actually maybe they won't, or they'll go the other way. But feedback-wise, guys, like especially people that attend the stream a lot, obviously always very, very welcoming to new people. Knit as well. Hello, my lovely friend. If there are times that work better for people, maybe we can look into this. I don't like doing it a lot later because I really want to move these sessions towards working on actual kind of setups that we can look at for the day, right? So anyway, all of that aside, we've got an hour forward, sadly. Oh no, Kelly. Do you know what? As soon as I said that, I thought, actually, do you know what? I think I've got that the wrong way around. I think it's actually about to get worse, isn't it? But oh no, bless you. Well, I don't know when we catch up, actually. I don't think it's too far away, maybe in the next kind of couple of weeks, but let's take a look at it. I think if other people can make it earlier, maybe we'll try and smash this out an hour earlier and give ourselves an even longer run in at the New York session. All right. So today I wanted to cover the topic of liquidity, right? So a really, really big thing for me. A really big thing for me with the course that I'm writing at the moment for the Nest is, and I don't mean this in any derogatory term, I don't want it to be like a typical or a standalone technical course. Why? Not because I don't believe in all that stuff. I studied it really, really deeply, but there's so much good course material out there. And, especially on traditional market trading methods, techniques, pattern trading, etc., you have things like the CMT, the Chartered Market Technician course, which is, basically the highest respected accredited trading course that you can get. And then it's market structure, things like this, bits and pieces. And I've been writing this course now for a few months with the team, and Bast is doing one as well, which I'm super excited about as well. I think Razum's doing one, Pedma7 doing this incredible course about algorithmic trading. And we really want to just put ourselves at the forefront of having the kind of best, most proven, most data driven approach to these courses. And for me, it really made me think that actually what I really bring, or what trading really brings to me, is in my views on the market. So I really want to share that with you guys. And the truth of it is, when I sat down and I brainstormed this out, what are the key kind of thing for me in the market? It's liquidity, right? A few more hellos to put in, a few little flood of people coming into the room, in and out. Kelly, can't find it. Johan van Vuren. What an awesome name. Dutch, possibly, or maybe showing my British naivety there. But question, please, with Bybit suspensions in the UK from October 1st, yeah, where will you be doing your trading, BitGet? Do you know what, mate? This is actually a little bit of a bone of contention at the moment because it's very, very tricky. Obviously, the UK regulators have, in my opinion, made some colossal mistakes in how they're approaching this. And as has happened with Europe, and we've seen it with the fall from the financial district in Paris, we are just giving away this huge market share in, what's an incredibly exciting industry, whilst they use the narrative of banning it because it's dangerous, yet they keep pumping all the bloody betting companies, which, is far more dangerous and a lot more destructive, which all the data will tell you. However, in answer to your question, my friend, I'm not entirely sure at the moment. So I obviously have access to decentralized exchanges, whilst at the same time I would never kind of recommend anybody do anything that's clandestine or underhanded. For me, obviously I'm a professional registered trader with a number of bodies and entities. I get audited every year. So like everything that I do is completely transparent. And within that, obviously we need to be really, really careful. However, what I would suggest is that if centralized exchanges are getting a little bit out of reach, which I know they are for a lot of people, especially people in the UK are suffering quite badly, then there are other alternatives out there in the shape of decentralized exchanges. But in terms of other centralized exchanges, I think it's going to be an issue that we're going to encounter with pretty much all of them, unfortunately. I obviously do a lot of traditional market trading as well, so like Forex, equity markets and bits and pieces. But obviously, if that's not your thing, although I would always recommend to everyone to really kind of explore those marketplaces, right? Traditional market is something that I know can seem a bit scary to people that are in crypto because, you just take one look at like MT4, for example, and it looks like it was made in like the 1800s. But there's some exciting stuff coming on, and we're doing a lot more about it at the Nest as well. So I hopefully get a lot more education material for you guys, and we'll start covering a lot more of these things on stream. But in terms of an actionable step, what I would say is I would look at it from a regulatory point of view and say, okay, who's actually legitimately able to provide my trading facilities in crypto in the UK, and then kind of base it from there. But for me, at the moment, I have a couple of decentralized partnerships that I can use. But obviously, very sadly, we're going to have to move away from that one with Bybit here in the UK. But fortunately, our brothers and sisters abroad can still use Bybit because I do really love it as an exchange. I always have done, not just because of the endorsement. It's always been a very good exchange for me, especially as a low time frame trader. But unfortunately, that is becoming an issue. Erica as well, don't mind being up this. Usually up till 3 a.m. You lunatic. I used to be like that as well when I was younger. I just didn't really feel like I needed to sleep. And yes, I'm doing a course, going to do a course for TBN. I want to cover some of the principles of it today with you guys. I know Monday's our little bit more education focused session. So it's basically just about how I view the markets. And really kind of about liquidity hunting, really. Craigie boy, wonderful to see you, my friend. Hope we're not getting in the way of your work. Moral, marvellous Monday to you too. I am feeling a bit better today, but I've still got the remnants of this cold I can't manage to shift, but I'm starting to think some of it's going to be allergies as well. But Greg as well, welcome, my friend. Good to see you in here too. One more now, yeah. Yeah, Adrian keeping us guys busy hands. He does, man. He's such an inspirational character. I don't know if you guys saw the post today about the almanac. So the Stock Traders Almanac, which is basically seasonality patterns and studies, which completely transformed the world of traditional market trading, have contacted Adrian, Crypto Burb, for the to make the Bitcoin version to study the seasonality, the trends. He's one of the highest qualified CMTs in the world. You can't get any higher than his level, and one of the most respected people in the industry. And that's really exciting because the more that we can merge traditional markets with crypto, then the more kind of weight and the better kind of I don't know what the right term is here. I suppose justification, verification, something like that. It gives it just credibility. I think stops people kind of brushing it off and saying, well, yeah, crypto's this, crypto's that. It's not. Huge industry. It does have seasonality patterns. There's a lot of traders out there making a lot of money on it very consistently. So, that is something to watch out for when that drops. And I believe it's all going to be free for you guys as well. So do keep an eye on that. Piskin, not much liquidity in BTC, mate. No, you wait till we start taking a look at the 1 minute charts later. It ain't much of it ain't Dutch burn. Do you know what? No way, Johan. That is absolutely freaking brilliant. A South African, so Holland and South Africa, just two of my favourite places in the world. I'm very fortunate to have been to both of them a number of times. but yeah, I won't bore you. But the KwaZulu Natal over on the east coast, right? Go out there, up sort of a little bit more north for the safaris, but pushing out off Protea Banks and Umkomaas and stuff for the shark diving is just insane. Okay, that's interesting, Pisket, as well. So use BitGet from Spain. Yeah, I'm not sure what their situation is with them. I know there's been some issues with them here in the UK as well. Yeah, yeah, exactly. Onto the old ruggers. It is going to be an interesting one. We love Bybit as well, Kelly. I think the good thing is all of our international customers are still having a great time with it, but it really does suck that the UK is not Bybit's fault in any way. It's the UK regulators that have messed this up, and we are struggling with it. Well, yeah, exactly, Hans, as well. You've got within Afrikaans, right? The languages, there's so much Dutch influence in that. Right, anyway, so I don't bore you guys to pieces. We're going to start with Bitcoin today, right? Now, I thought, do you know what? Let me show you. Actually, I just got some of my trades on here. I'm sorry, the charts. A little bit of a mess. Let's just get rid of some of this stuff. So some of this is on here basically from the Bitcoin report that I released on a Sunday evening. So for me, we've got a bearish bias here. We're looking at a bearish situation and the scenarios that we're looking to play out. So this pink line, by the way, I'll come back to this and remind me if we don't. Nemesis, greetings from the UK. Very, very nice to have you on here, my friend. Welcome. So remind me, I'll go back to it. The pink line is just an indicator I want to share with you guys. Very, very simple. Previous week's high and low, right? So just an easy way that you can just get that written out. But what we can do first is let me just show you the information from the report. So we're going to start here on the daily, right? Because for me, this is kind of one of the key areas here. Now in the report, I was just saying how the X's that you can see on the screen are basically our high probability targets, right? Now I'm going to run through why the reason is for that and also kind of my thinking within it. But I just want to kind of start at the beginning just so that we can stay really nice and clear. The X's were based on a 4-hour chart, right? So we'll look at that a bit closer when we go on to it. However, a few people commented, which I massively respect. They just kind of said, look, market structure's looking bullish, not really sure how you can be looking for bearish setups at the moment. And, everybody has different views on the market, right? And sometimes I'm wrong, sometimes they're right, vice versa, etc. The key is, it's a very difficult thing to do, but is to really not care about what other people think of the markets. That's no disrespect to them. They've got their systems. You've got yours. You need to understand the data enough that actually right and wrong doesn't come into it. You're making statistical decisions based on probability. So with that in mind, how we look at this read on the market. And now when I was saying that I saw weakness here, I just want to really clarify what my thought process was on that. Now, I'm always looking to the market in the terms of where's it reaching for? Okay, where's the liquidity? Where's the clear and obvious liquidity, right? Now, on a daily scale, as we can see here, I'm talking about areas like this, right? If we were talking about clear and obvious, right? Clean, clear, obvious, swing highs, swing lows, yeah? Why do we target these areas? Because of the stop losses, yeah? So the stop losses lead to liquidity. Major players, big accounts with large positions need to offload those positions to willing buyers. Yeah. So what that means is that why is their liquidity resting above these highs? Well, people that have gone short in here, will typically have their stop losses above this high. Yeah. Now, what is that stop loss in its actual premise, right? That stop loss here, because we're selling, is a market buy order. Yeah. So that makes sense. So that's a market buy order, meaning that if you're wrong and you're short, and you get stopped out, then you market buy. So you're selling that back to the market, right? Now, what that does is it creates these liquidity pools whereby the market can be forced and manipulated or just has a natural course, reaches into these pools, and then gives the opportunity for large orders, for big institutional players to get involved, right? Piskett mentioned this earlier, talking about the idea of the markets being quite liquid at the moment in crypto. And that's why when we look at the lower charts, you'll see like a lot of gapping bits and pieces like that, right? But to start with our high time frame view, there are two things of really key interest to me here, right? So the first one, we see this orange box. This is the breaker candle, right? So this was the last up candle, that we had before price purged liquidity here, So price came to here, set this candle, the big white candle that we see. And then what happened is it cleared out the liquidity resting below these lows, So in doing that, then when we recovered above it, right, that is confirmed as our breaker candle. We close above it here. So our expectation then, is that we close above it here. We're looking for trades to come back to this area, and then we're looking for bullish plays targeting this high up here. Okay. Now we would break this down onto lower time frames to look at it, but that's the core principle. However, what we always want to have in mind is our kind of key bias or our higher time frame bias. And if we're zooming out to the weekly, we can see, as I'll just show you here, that we're still very, very bearish. Okay. We've got price come down. We've swept this low. Yeah, we took out the lows here. And now we've had a bit of a reaction. What happened, as is typical, in my view, price is either reaching for liquidity resting above an old high or below an old low, or it's looking to rebalance a fair value gap. Yeah, so very, very key core principles in training under ICT many years ago that I've kind of taken on and then, developed with other market styles as well. However, like I would always say to anybody with concepts like that, you always go to the source of the people that you learn it from. And I do this on every stream just out of the respect from the people that I've been fortunate to learn under. But, ICT, he's got a lot of core materials out there. I was a long time ago I worked with him, but and I haven't done his new mentorship. I do hear very good things about it. Trader SC, who's just, absolutely fantastic. Obviously, Crypto Burb, people like Trader Dank as well. So, if you're going to follow people, you're going to learn from people. I always think it's good to accredit them. There's not many original views in the market anymore. People will trade moving averages, right? So there's only so many ways you can trade moving averages. People would trade liquidity, other people would trade chart patterns, etc. The reason I'm bringing this up is because just make sure when you're kind of training, don't procrastinate or lose too much time flitting between lots of different styles and trends and systems, right? Because what you want to do is find something that suits you from a time-based fashion. How much time can you give to the market? Then you want to dive incredibly deep into it and work on mastering what that system is. And then you just want to test crazy amounts of data, yeah? So that when your system triggers, you've got that confidence to say, do you know what? I know, for example, at the moment that I've got, say, a 67% win rate on my system, right? And I know my average return on that is at least 2.5R, meaning that I know that system is profitable over time, which means that if I get into a losing streak, which happens, I lost 4 trades consecutively a few weeks back, that I don't just sit there and then panic that there's something wrong with my system. I know that that will counterbalance. And, one of the brilliant things was actually at the beginning of last week, after making all these statements, as we were trading as the group, we came back off of that. And when you look at the comparable win rate, we were, on $1,000 account, a $10,000 account, sorry, we were, something like 1,280 up, right, for the month. So you need the data to give you the confidence in the system, right? And that's why I always want to kind of show you guys the quite simplistic way I have of viewing the markets, because I do want them to be really simple. So bias weekly, what's happened? We've taken out these highs, we've seen a bearish reaction here. Now, a few things, once we've taken out these highs, there's a few things I'm looking for. I'm looking for the fair value gaps, order blocks, untapped highs and lows, So we see here, we take out the high above here, we get into a bearish posture. Now, what are we then looking for, if there's an expectation here that we're going to have some form of continuation? Well, what we want to see, first of all, is we want to see the order blocks hold, or we want to see price heading for a fair value gap to rebalance it, right? So what we have here is price comes up, what happens? It sets this bullish order block here, right? Now, it doesn't confirm this order block is the problem, because we don't close above it. So for me, even like with this one, this down candle, this wasn't confirmed as an order block here until we closed above this here. Now, yes, we lost the majority, we lost the entire move, right? Waiting for that, which is why we wouldn't be waiting for it on a weekly scale. But it's just to give some context around why we need this. However, if we were to then look at this in the opposite form and say, okay, well, what have we got here? Right? If we're looking at this from the other side, saying to myself, okay, well, what can I do with this candle? If this is about to become a bearish order block, which because we've closed below the body of this candle here makes it valid for me, because it's against the trend at this point, then I just want to see what happens when price reacts in here, and then we can take that a step further, even if we didn't have the confidence of that, and say, okay, well, we've now set this order block. Yeah, we can see price closes below that here, and price actually closes fully below even the wick of it here, meaning that in my mind, I'm then looking for more downside action. However, I'm only looking to target this fair value gap. Why? Because it's natural for price to have a corrective move here. Yeah. Like I said, if we're not taking liquidity above an old high or an old low, yeah, or engaging with an order block, then we're looking to rebalance a fair value gap. So as price draws into here, yeah, then I can say to myself, okay, well, where's the high probability point that we're most likely to react? And there's a few, right? But the first thing we would target is the zero point 0.5, because if this was our premium and discount range, then we would want to be seeing price draw down into the bottom 50% of that so that we can look for long positions. We don't know how deep the retracement's going to be, but it allows us to monitor it, right? However, from a different side, what I'm really interested in here, which I trade a lot, is the golden pocket. So it's just a Fibonacci between the 0.618 and the 0.66. Okay, the 0.705 here is the OTE, the optimal trade entry as taught by ICT. And I kind of use those three levels as a cluster really here to gauge strength. So when we really ripped through and closed below here, we did two really important things that made me bearish. The first thing we did is we inversed this fair value gap. So that should have offered bullish support. It didn't when we closed below it. Yeah, we then looked for retests into it and for it to chase liquidity of the lows. The other thing that we did is we really just ripped through the golden pocket and the optimal trade entry, meaning that for me, it just didn't really show a lot of strength at that point. Okay. So this same principle I will overlay on every chart as we go through. Okay. But it's just to kind of, for people that are new to the stream, hopefully it kind of gets you into that kind of mindset of how I'm kind of looking to trade the markets, but also just how I'm looking to kind of get a handle on where I think the price is going, right? So bearish on a weekly, on a daily, right? We can see here, we've labeled these up, right? We've got this breaker candle. For those of you that don't know about the breaker candle, I have done a Twitter thread on it. If you can't find it, do hit me up and I will, I'll get onto that. I'll do another one. I know we've got some good infographics I can share with you guys as well. But basically the idea of a breaker candle, a little bit like an order block, is this time we're looking for the last up candle before price purges liquidity lower and then recovers. Now, this recovery, we're seeing that as strength, yeah? And then we're looking for this area to hold, yeah? And then we're looking to trade it to liquidity higher up. Now, ultimately, we don't get here, right? Price starts to break down, and that's fine. That can happen for a number of reasons. We need to remember that we're still on a very high time frame here, right? So what's playing into our bias in this respect, we're going to refine that on lower time frames, okay? So why was I bearish when I posted the Bitcoin report last night? So I posted the Bitcoin report. We'll look at it on the 4 hour. But I think it was 2040, so about 20 to 9 UK time, so 20 to 8 UTC. So just quickly, the other thing I've got marked up on here, a couple of things, equal lows, which we'll look at closer on the 4 hour. These order blocks, so I've made an allowance for both of these bodies because they overlap and then taking it to the lowest wick. Now, again, once we closed above this here with this candle, the expectation is we chase down the liquidity from these highs and then progress to these highs, right? Ultimately, we didn't. We rejected on a lower time frame. Could be for a number of reasons, which is fine. But then I'd highlighted this order block again as the key importance, because if we closed below it, as we did yesterday, I was very clear that my expectation is for price to trade lower. Okay, so all I'm going to do is I'm just going to hide this now, right? Because we want to focus on this 4 hour, this daily order block, right? Now, one of the reasons for me, my preemptive outlook of weakness was how we reacted at this order block and also how we reacted when we swept these equal lows. Now, if the order block wasn't going to support price, and we can see with our initial reaction here, we had this comeback, set almost a pin bar candle here with a little bit of a nose, yeah? But then look, there was just no momentum here. Now, don't get me wrong, Friday here, you can get a flat market sometimes, especially bearing in mind we had a very, very news-driven week with the FOMC. And we expect, to be a little bit of low volume, or very much so low volume over the weekend. However, my concern here was a couple of things. One was this order block here on the daily, because I think this should have created and catalyzed a bullish reaction. But then when we ran the equal lows here, which was with this candle, we just didn't really see any kind of recovery. And this here, for me, right, price opened, ran the highs, took out all this liquidity, yeah, came back, dipped into these equal lows, barely had any reaction, right? So then that was it for me. 9 o'clock last night, I didn't trade this. I don't trade weekends. I was always trying to get some separation from the charts. But I know a lot of you guys, full-time jobs, careers, families, etc., that weekends present a really good trading opportunity. So just make sure. Look, this Sunday, for example, we're going to look at this in a minute, but I put the setup out, which, funny enough, actually was still on the chart from earlier. So what you just want to do is, doesn't mean you can't take these setups. It just means that make sure you're really, really using a lot of data to understand how the price dynamics work over the weekend. Okay, so what happened? This was the 1700 my time, obviously, to 2100 candle. The close of that, yeah, very weak reaction from these equal lows is what had me feeling bearish. So I just said, look, this is our first target here. Price comes in and takes this out. Now, obviously, we've got an order block we're coming into here as we look across, not really paying too much weight to that, right? What I'm actually looking at the moment here is to kind of say, okay, well, on a 4-hour scale, if I'm looking for bearish continuation here, then should this candle close as it is and close below the prior candle's body, then I would expect us to kind of head further down towards low of day. All right. So in terms of bias, guys, does anybody have any questions? Is there anything that you're really struggling on when it comes to that? If we looked at that from our daily to our 4-hour, and I'm going to take it onto the lower time frames now to show you how we would kind of look to hunt that liquidity down, for want of a better term. Now, if anybody does think of anything, or if anyone's really kind of writing anything out that's quite detailed, please do go ahead and we'll cover it in this session. But what I'll do is I'm just going to take you down to some lower time frames, right? Just using the same principles. Now, the 15-minute is the lowest time frame that I'll use in terms of looking for, order blocks, fair value gaps, really, and key levels. Yeah, so like these highs and lows. And the reason for that is because the lower the time frame, the more noise, and typically the less consistency. So you want to kind of frame the trade idea on the higher time frame. Yeah. So like we've said with that, what are we watching? We're watching this order block here. Yeah. Why are we watching this order block here? Well, if we go back to our 4-hour chart, we remember that we've taken this body to the top. If this 4-hour candle closes here, as we're going into 1 o'clock, so the next 30 odd minutes, as we're starting to trickle into our New York AM session, when I'm really starting to get interested in trading the New York AM session, well, all of a sudden then that tells me a lot. If my theory is we close below this order block, and that's a strong close, what I mean by that is there's a lot of volume in the body. Should we sustain this close, then I really do think that this here, which is our low of day, becomes a very viable target. Now, what does that mean then in terms of how I can get involved in that? Well, a couple of things. If we run the low of day or the high of day, yeah, which for me, we got to remember that includes the Asia session and London by the time we step into New York, yeah. And actually, let me give you an example of yesterday. Where was it? This one. So this was actually it's actually a quite simple way to look at the market, which I really like. So I've got my high time frame bias. Yeah, my high time frame bias is bearish. Okay, so quite simply, I'm then just dropping to a 5-minute chart, right? Let me just scroll this back to Sunday. And like I said, I didn't take this trade Sunday. Full disclosure, I didn't take it on any personal account. It's not one that I shared with the nest. I don't trade at Sundays. As tempting as the setups are, I just don't really. I really don't have the the time to do it, to monitor the trades, the energy for it as well, right? I think it's a very demanding industry that we're in. It's a very giving one as well, right? But like with any industry, if you take it incredibly seriously, you need to really manage yourself and your time. Okay, so for me, I give myself the space of the weekends so that I'm the best version of myself in the week. Now, really simply, there's a few different ways that we can look at this, right? We're looking at this on a 5-minute chart here, and when I'm talking about session liquidity, yeah. So what liquidity do we target? we've got our highs and lows, yeah, which, like we said, we can allow from the daily to the 4 hour to the 15 minute for that. That's where we want to see swept. Why? Because we want the clear and obvious. Where are the stop losses? Yeah. And this is why I had these on the chart earlier. And I just wanted to pop these on for you, right? So all it is previous day's high and low. These are all three indicators on TradingView. Previous day high and low, that's the blue line, all right? And previous week high and low, yeah, which is the purple or pink line. Now, while we're not worried about that in the moment, although it was significant this morning because, look, we ran last week's low, which was here, which was actually this candle here, set that low when we ran that down here, yeah, and we've come back up. Then you can see that there's a reaction from it. Now, the daily highs and lows, 100%. Argyle, Hussam, thank you very much, mate. Yakuza Kana, hey, buddy. Good to see you. Hope you've been keeping well. And Hans, yeah, agree. Me time is very important. You have to manage yourself, have to manage your energy levels. I think we've suffered really, really badly, especially the culture in London, just been toxic for a long time. This burnout culture where, people just competing to say, I haven't slept for 2-3 days. We used to do trading marathons for that you trade through the night. You're just not the best version of yourself. You should work smarter, not harder, and having that time to rejuvenate, family time with friends, everything like that. It's just so important. It really, really is. So just make sure you balance that out, and obviously that you enjoy the journey you're on. So many people focus on the destination in this industry, but the journey is just one of the most incredible things. Thank you, Mert. It's actually me, BC Richfield. Unfortunately, I'm not bringing you the genius of Crypto Bird, but you are always very welcome here, my friend. So these lines, right? Why are the lines on the chart? Because it's liquidity. What they are is they're representative of the previous day. So this day here, if we look at the high of this day and I just hover over there, we see it lines up with this blue line here. Yeah, that means the high of the day, the low of the day, right? That's, to me, are liquidity targets, right? It means that I have a bearish bias, yeah? So what am I doing? I either need to see the current day's high and low, which incorporates the Asia trading session and London by the time I come into it at New York, which is my blue line down here. Yeah. So if I just put a vertical line on here, what was I looking at? What would I have been looking at if I was trading this yesterday? Well, quite simply, I'm going to do this in red as well, because I do that to remind myself that that's my bias. I'm not looking for long setups here. I'm just looking for shorts. Yeah. So I'm going to hide this for a second as well and just focus purely on decanting our high time frame bias onto lower time frames to execute. Okay. And this is what I mean when I say liquidity hunting. Liquidity above these highs and also liquidity resting above these highs, right? That's the high of day there. Yeah. So that's the high of day there that we've stepped into, right? We had the high of the session highs were just slightly before this, which were here before we stepped into New York, which is our red line. Yeah, we're stepping in and we're bearish. So what are we looking for? The moment that we step in here, we want to see key liquidity swept. We've got beautiful liquidity above here. Yeah, prior day's high. And we've also got session liquidity resting. Yeah, here. So I'm just going to get rid of that just to keep it clean. And this is what we want to see. We want to see this sharp, aggressive move higher, followed by a shift in market structure, right? Now, this blue box, is just simply highlighting the candle that breaks structure, yeah? So what we can do here is when that happens, and let me just pop replay on for a second. Right, now, we've got a low in here, or certainly in here, or here, depends how you're defining your swing highs and your swing lows, right? But for me, I'm looking for a low that's flanked by two higher lows or a high that's flanked by two lower highs, right? That's the key area. I won't go into fractal patterns and bits and pieces, how else you can identify them. That's, up to you, or by all means, please do ask questions about them and that, be happy to answer them. But for me, that's how I'm looking at it. So we get our shift in structure here, or probably here as well. They're probably, both of them are quite equal. Price comes up, takes liquidity. Now, if this was showing strength here for me, price would be looking to draw down into these fair value gaps here before recovering. The fact that we took this liquidity and aggressively broke down so quickly means that this area here, the candle, what I call the structure shift candle, the MSS, this here, market structure shift, is where I'm then looking to see if there's anywhere in this area I can get involved. Now, I do trade the 1 minute chart. This particular system is set up to trade lower time frames, but obviously you can try these methods out using a higher time frame and then a higher execution time frame as well. But for me, I'm just asking myself, okay, are there key inefficiencies in this move here? So let's just put them. Here's our fair value gaps. These are areas that we can target. Where do we want to be aware of? Well, the fact that, price could spike up into any of these fair value gaps, right? Now, does it mean that we take these as our entry, right? No, not necessarily, right? But we know this is the 5 minute candle that broke structure. The reason that we want to see that, and we want to see that ideally with displacement, is because that's the time frame that I like to see. For me, that's the lowest time frame I can push onto, that I can get enough reliable data to build consistency to then drop onto a 1 minute time frame to look to refine the entry. So if I've got to make allowances for these, why is my entry kind of here in and around the middle? Well, first of all, I'm making an allowance for premium discount, right? Just make this PD so you can see that. Meaning that I want the fair value gaps to be up here in the red box. Do I want it to be this one all the way up here? Not really. It is there, but we also have these order blocks to consider. So what should be defending price here are, in my opinion anyway, are these order blocks, which just because they're next to one each other, they combine because they'll just make a higher time frame order block. See how price came back down, tagged into these, and then had a big sell-off. That adds a little bit of extra validity for me. And I'm just then looking at it from a structural form. I'm looking for inefficiencies in the form of fair value gaps that price can draw into. I'm not going to be greedy enough to try and take this one, or maybe, I would put 30% here, 30% here, 30% here. That's the way that you can kind of, what I used to call feathering into positions. So you can take a small position or a half position size at your lowest one, then you can add a little bit more here, right? So when I do that, then you need to remember that your entry position becomes the average of those two. But to not overcomplicate it, let's unlock this for a minute, and let's just put it on this first fair value gap, right? Why is my stop loss here? Well, I want it to be a few points above this swing high. Why not this swing high? Because this order block should be defending price. Price starts coming up too much into this, the chances are that it's recovered a little bit too much strength, all right? So then from there, it loses a lot of its appeal. What I would then do is wait for it to come back down. It might be sweeping liquidity again, and then I would look to the same thing to get the same execution, all right? And then I'm just checking to see that I've got a good risk to reward. Okay, this is based on prior liquidity from last week. It's a 3.99R trade, all right? And, as we know, that one worked out well. I didn't take it because it's a weekend trade, but I will be doing exactly the same today. So I know there's a couple of questions in there as well, and I'll just finish this off quickly and then I'll address those. But the reason I just wanted to run over that on yesterday is just because of what I've got marked up today. Yeah. So if we're looking at the same principles here, well, I've still got a bearish bias. However, if we sweep key liquidity, then it doesn't mean that we can't scalp a counter trend trade. All I would do is just reduce my position size to mitigate the risk, and I would look to get out heavily at my first target. Yeah, meaning that, just for example, let's say we do something like this. We run this, price comes in, we recover market structure. Yeah, it gives us an opportunity to get in here. Then, I would be very aware of those highs, right? And then I'd be very aware of this. Ultimately, I'd be looking for it to take out liquidity above the high of day and those equal highs. But what it means is that if I was in a trade, say here, stops under this low, then when price got to here, I'd be looking to take a little bit of profit and then move my stop loss to entry. Yeah, so I de-risk it. And I would do that faster in this respect because I'm counter trending my high time frame bias. Okay. But what I would do is always keep a percentage of the trade open for these higher targets as we start to progress. Yeah. But always remembering, the high time frame really is king here. So as we start to kind of, utilize the lower time frames, we really can't forget to zoom out And actually, as we zoom out, we need to remember to tell ourselves, well, hang on a minute. Let's also remember this 4-hour candle hasn't closed yet, right? So there's still a chance. Look, we've got 18 minutes. This candle could completely reverse and come back above here. If that were to happen, then I would be favouring price attacking the liquidity above these highs. All right. So just got a couple of quick questions. I'm just going to turn some of these indicators off. But do remember that if you need to use it, really, really good to train your eye, previous day high and low, and obviously as well the previous week high and low, which just give us some really, really good data. The other thing to do is when we do run key liquidity is watch the reaction. Big part that played into my bearish bias that I shared yesterday was the fact that we just didn't get a very strong reaction running these equal lows here. So equal lows, session highs and lows, previous days high, previous weeks high and lows, etc. They're the key things that you can target. So quick question here from our lovely Erica. So when marking order blocks, I see sometimes you count the wicks as well. Other times you leave them on the upper or lower wick, depending on the nature of the candle. What's your rule? Really good question. So this is something I kind of developed myself. Like I say, teachings of ICT, people like Trader SC as well, Larry Williams, for example, too, really on the old school front. Then you look at the kind of supply and demand teachings and methodologies of some of the early traders, or like the Murphy book on financial analysis of the financial markets. Reading and digesting all of that information, there's a lot of people that have kind of differences of opinion. So for me, I found most useful in my data testing that my rules are this. I'm taking, if I'm looking for a bearish order block, as we are here, yeah, which is a bullish candle, I'm taking the bottom of the close, yeah, of the body only, to the top of the wick. Why? Because, and I learned this a lot from SZ, is that the volume, the trading, the volume is in the body of the candle. Yeah. The wicks are where prices tried to go to, but hasn't managed to. So we don't know exactly the trading volume in here, but the bodies don't really lie. The same way as another amazing thing he says is small-bodied candles lead to big-bodied candles. Yeah. And to always respect the candles, right? If you're seeing big, high-volume down candles, bit risky to fade those until you get to a legitimate target, which in this case was these equal lows. Yeah. But so a good way to think about it is this: the time that you will see me mark both, yeah, is if it's immediately followed by a fair value gap. Yeah. So for example, if you have a, probably going to struggle to find one now, aren't I? On a daily, but okay, like this one, for example, right? Down close candle expansion with a fair value gap above it, then I will make an allowance for the whole candle here. Yeah. Because basically this runaway tells me that there's an extreme amount of strength being shown here in terms of buyers. So this is a broader area that should we return here, I'd be looking at that to have an equally strong reaction, or at least some kind of reaction. Yeah. Because look, a decent reaction on a daily scale can be an epically good trade on a 5-minute chart, right? So again, a lot of it kind of determines that. The other thing that I do bang on about a lot are just these inverse fair value gaps. You know, when you're looking at market reversals and stuff like that, this is obviously a bullish fair value gap here. Our expectation before this price action was that price would come up, retest this, and then go higher. As soon as it closed below, the expectation is it's going to chase down this low, then etc., right? Until we get an indication that something that should show great strength for the bears, this bearish fair value gap, gets closed above, and then ultimately we see that as a powerful sign of reversal, targeting liquidity here, and so on. But again, just with stuff like that, you can just dive into the charts and really, really kind of go nuts with that. So I hope that makes sense, Erica. I wasn't too quick on that one, but the kind of long and short is, if it's a bullish order block, yeah, so the down candle before a move higher, and you pick any of these, then I'm allowing from the top of the body to the bottom of the wick. I'd always draw my order blocks in blue. And then it's only valid here for me when this closes above the body. This close here then has me targeting the next swing high above it. Yeah. And actually a really good exercise to do with these is that you can just go along and you can take these out and go, okay, well, we don't know this PA here, right? But we're saying to ourselves, right, what happens here? Okay, we've got a down close candle. At what point do we close above that, the body? We don't, yeah? But all of a sudden, we've got this up close candle here. When do we close below the body? Here, yeah? So where's our expectation that price is going to chase down this low, right? Ultimately, it gets support from that order block. but it allows us within this move here to trade this from here all the way down to here, right? They're the opportunities that we're looking for, or they're certainly the things that I'm targeting. But like I say, really dive into the data and make sure you get that, because then the data really, really is going to be your friend on this. Was there anything else that you wanted me to kind of cover on that front, guys, in terms of how I'm looking at that? Or would you want to maybe take a little look? I said I would take a little look at ETH as well. I know I am known for neglecting our poor old friend ETH from time to time, which I don't mean to do. I've got a lot of love for ETH. You're very welcome, Erica. Very, very welcome. And like Hans says as well, close of the wicks works really, really well for him and his systems. And again, that will involve, some different trigger mechanisms. It will also, involve some different time frames as well, probably. So that's one of those things. You have to forgive a little bit of mess on the chart. I think we've actually been doing quite a lot of active trading on ETH recently. But let me just zoom out and let's kind of look at the same thing. We're going to be in a very similar situation here that we are with Bitcoin, right? So why am I bearish on Ethereum? So 2 questions I'm asking myself consistently is, where's price reaching for and where is it delivering from? Okay. So in this case, where is price delivering from? Well, it was delivering from this fair value gap, this bearish fair value gap, right? Price came in, bearish fair value gap, delivers lower. Where's the target? Well, the target still hasn't been hit, in my opinion, because on a weekly scale, it's this low. It's now going to be potentially this low as well, right? But the other thing is, where else are we delivering from? Well, we're currently delivering from this bearish order block, right? Which became valid when this closed. Now, when this candle closed here, the expectation closing beneath a bearish order block is that we first chase down the prior week's low, which is here, right? So we're going to leave that on there and we're going to do that in orange. Now, the next expectation is that we travel down towards the swing low, which is here, okay? And that's where we're sat on a weekly scale. Hasta la vista, Barbie. Hello, mate. Good to see you. So, everybody get that? Now we're just going to ask exactly the same questions on a daily scale, except what we can see here is, if we come here and we look at our open, and we're just going to look at this on a lower time frame as well, what we're asking ourselves here are exactly the same questions, right? Now, we ultimately chased down this low, but we're going to pull that back to here because I want to look to how we could have traded that had it, aligned with our timings, trade mechanisms, etc. But remember, consistency in what we're talking about. Where was price delivering from here? Weakish order block. Yeah, weakish? A weekly order block, sorry, right? Now we overlay the data from the daily and we can see the same thing, yeah? Came down, closed just below the body here. We're ultimately chasing down these lows, right? Price did that already, so that's now not of interest to us. What is of interest is this, or are these, sorry, would be a more accurate thing to say. Right, so remember what we said. Weekly scale, the open of this candle, we were looking for on a weekly basis to reach down, first targeting this low, right? Now on a daily scale, we've got the same. Can you guys see that clear enough, how we've got this gap here? Yeah, that hasn't taken out that liquidity yet. Price very rarely just reverses for no reason, right? It needs liquidity to do so for the major players that move the market. So we were just bearish this morning, chasing down this low, right? So that's our daily. Now we're just going to decant, right? Because price is delivering from this bearish order block. From the moment it closed under here, we wanted to see price open today, trade higher, and then sell off. Now, we got this during Asia, which we'll take a look at here. But if you're somebody that covers the Asia session, funny enough, one of my private mentoring students does and trades it exceptionally well, right? Then you could have got some great setups or really, really kind of late into last night, in truth, heading into Asia this morning. Now, what are we doing from here, right? So let's just get rid of that for a moment because we know we're bearish on this scale. All we're doing is we're just saying to ourselves as we go through Sunday, where is price delivering from again? Yeah? Just really, really nice and simple. What happens? Price closes below here. This was in the afternoon yesterday. Price has now dropped down here. We can see ultimately chased down this low. So that was why that setup was in play yesterday, right? Based on daily 4-hour bias, looking into here, seeing the close below the 4-hour order block, stepping into our New York session, expecting highs to be run. We ran this swing higher, or it wasn't a swing high, but we ran that higher. Yeah, it was on a lower time frame. And then we ultimately had this rejection. So on the 15-minute chart, we can see we had this sweep here. Yeah. We can see we actually took a counter trend trade into this sweep here. Or, well, we didn't. We labeled this up on a counter trend trade because it triggered the system. Took liquidity, broke down. Yeah. Again, we're looking for this breakdown here. Yeah. High volume breakdown with displacement, showing us that when price revisits this area here within our trading session, we're looking to trade it immediately to this low. But ultimately, in our mind, we've always got those high time frame lows and highs in mind as well. So does that make sense, guys? Just in terms of how we can take something from a higher time frame, decant it down, and then build ourselves a trade plan. And actually, this is a system that I use really, really heavily on traditional markets. So I just want to finish up today by just taking a quick look at the NASDAQ with you all. I love trading equity markets, something I got back into a lot more recently. And we've got a wonderful prop desk team working at TBN, and hopefully some really exciting announcements about that coming out soon as well. But these are just the same principles that we would overlay. And, you can start on a weekly scale. You can decant it down. I'm going to do it on a daily scale for you guys, just so that we can stay relevant. We can see that this is on here. Let me just get rid of these. These are for a trading session. Depicting bias, like intraday bias. Sorry. So we're here on the daily. Yeah, we've got that. Sure. Yeah, I mean, seems hard to believe that it's not going to reach down under here, doesn't it, Arms? Especially when it's already run this low. Yeah. On a daily scale, it's an interesting one, right? Because if we close below that order block and we haven't taken that out, my expectation is that we will. But the other interesting thing here as well, right, is like we said, you don't have to always catch the beginning of these moves, right? So let's just label up our order block here, for example. Now, price didn't close below it until here, yeah? But the following day, where's our clear and obvious liquidity target, right? Clear and obvious liquidity target, like we said, is our swing low, yeah? Swing highs, swing lows. That's where the majority of the liquidity is going to be resting, right? So when this candle closed down here, a lot of people would just either say that they missed the move or they're worried about order blocks in here and stuff like that. Don't. Clear your mind of all of that stuff. Only use it when it's right, when it's in context with what you know and in line with your data, right? So when this candle closed and this one opened, yeah, that's absolutely where we should be going short, right? Because our expectation is price is delivering from bearish fair value gaps, from bearish order blocks, right? It's weak and it's searching for liquidity lower down, all right? Especially whenever it takes out, you see a key swing low. If we're expecting that to be bullish, to have a bullish reaction, which it does initially, when it closes below, that again just adds lots of weight into our case that the market looks heavy. It looks like it wants to move lower, right? And we've got a pre-made target here in this swing low. So we can then look at that and go on to our 4 hour. I've left the red arrow on there to signify the start of the trading, when we can legitimately go, because it's the close of that day. Yeah. So within here, yeah, on Thursday, we were just simply looking for price to draw higher and then give us shorting opportunities lower. Yeah. That's our trade bias. Liquidity bias might be that we're looking to do some counter trend trading, but we're going to obviously look at both. So dropping down onto our 15-minute chart here. Go back to our red arrow. Yeah, so red arrow starts the day here, right? Now we can see, as we come into here, what do we need? Let me just hide those for a second and I'll explain these to you in real time. So remember that I'm always banging on about looking for liquidity sweeps, right? So we've established our bias, right? Big red arrow up there lets us know that we're looking to chase down this low, which I'm going to extend across because now we're on the much lower time frames, obviously. So now I need to ask myself, okay, can I get involved in a trade here? Whereby if I know where the draw on liquidity is, or I never know for sure, but just probability-wise, is that if we made our way all the way down to here, smart money, investors, institutional people, and traders that know what they're doing are going to want to sell to a big liquidity pool so that they avoid slippage, so they get the best possible price that they can get now, and so they can sell all of what they've got if they want to, right? Which could be a large amount. If you try and flood the market with too much, you can adversely affect price and then you lose out a lot to slippage. So I'm just going to take this down to a 5-minute, and we're going to follow our same execution pattern that we did before. We're going to look for that sweep on liquidity, right? Then we're going to look for a breakdown in structure and see if it gives us the chance to get involved. So what we notice here is we step into our New York session here, yeah? And then what do we want to see? We want to see price coming back up. We want to see some key liquidity left, right? A nice clean high or low, but because we're looking to short, we're interested in the high. So this is the first clean high that we've made in New York, right? Now, the reason that that's interesting for me is because that's the session high. That's the New York session high, right? Had we ran any of this other liquidity back here, then it would have been even more interesting for me, right? Because we would have been running prior sessions liquidity. However, we need our liquidity target. This is the high of session because this is the start of New York, right? So when this high was set, we have a bearish bias. We're looking for two things. We're looking for a liquidity sweep, yeah, and then we're looking for a market structure shift, yeah, whether you would allow for this low or this low, yeah. That's completely up to you. But for me, here we're flanked by two higher lows. Price shifts through here. So then I'm saying to myself, okay, above here, what can price draw back into that gives me an opportunity to enter? Remember, we're always talking about fair value gaps, order blocks, etc. So on a 5-minute chart, do I have a clear and obvious fair value gap in here? I don't, right? So what are my options to trade this? There's this order block, right? Or there's this breaker candle. Now, how do I know which one to choose here? Well, first of all, it's going to depend on my risk, right? So if I take my short position out, now the rule with trading this, the breaker, is that we would need a 5-minute close below it. And then when that happens, our entry goes on the bottom of that. And then we put our stops above the prior swing higher. And then we know that this is our pre-made target, right? So we've only got a 1.2 risk to reward there, right? Now, you've got to ask yourself over time, and when you test this data, are you happy to accept that? For me personally, I like to see a minimum of a 1.5R and to also have a clear liquidity target. Now, what we do have here is a very clear liquidity target, meaning that with expectation price will run to this. But what kind of puts me off here with the breaker setup is I've got to be really wide. Or if I'm not, and I try and get one of these like interim highs, yeah, then you do that, all of a sudden you get stopped out over here and price runs away, right? Because you're trying to squeeze the trade too hard. Price can easily draw up into this order block, can be very volatile. It doesn't close above it. That's really, really key. Look how all of the bodies respect that, just the wicks. But it doesn't stop the wicks coming up, right, and taking out liquidity above here. So you need to be really, really careful with your stop placement and not get too greedy. So for me, that completely ruled out the opportunity for a breaker entry, which means that I'm then looking to the order block, right? So the low of this order block, or let's have a look here actually. So the open of this candle is 14,815.8, and the high of this one is 14,815.6. So this one didn't actually tag us in. That just came very, very short. So actually we weren't tagged in until here. Right, and obviously we didn't know this at the time, but that's the rule, right? There's the order block. Now, a couple of things I just want to cover quickly as we bring the session to a close. One, that's a much better risk to reward, meaning that if I'm really willing to risk whatever this is, this might be $1 to you, it might be $5, it might be 100, it might be 1,000, it might be 10,000, right? Whatever your 1R risk is, let's say it's $100. Well, if you hold this all the way to target, you've got $242 return for your $100 risk minus fees, all right? Which would be okay in this respect because you've got like a 0.3. If you're ever worrying with that, if you are a member of the Nest, please do hit us up because a really, really dear friend and wonderful trader I'm fortunate to work alongside at the Nest Resume has made this thing called the position size calculator. And it just allows you to click on your entry, your stop loss, and your target. And then you see you get this lovely little box turn up down here. Now, if you had $1,000 account and you're risking 2%, that means that your stop loss here is $20. Yeah. Then on this trade, you would be facing a $48.93 return, right? However, what I really like is when we look at our position size, which has to be $6,943 to facilitate that, we need to remember that we're facing fees on that. You know, you could have fees of $7, $10 on there. So your real risk isn't just 20, it's 20 plus your fees. Always factor that in when you're trading, because that then does affect your real R, your real risk to reward. And for anybody that joins the nest or wants to come on board or is interested, please, you can find loads of great ways to do it now in the description below. And you get great things like the position size calculator and that as well. But obviously, it's not my main purpose. It's just Resume's built a really, really, really handy bit of kit. But does it make sense, guys? How if we just commit to reading our high time frame bias and then saying to ourselves, right, how can we then execute on the low time frames? It doesn't matter if we're chasing down targets as long as we're doing it within our parameters. For me, I need it to be in the New York session. I need it to sweep session liquidity, meaning the current session, so high of session, which is the New York in this case, or high of day, low of day, as in the prior session's high, the liquidity resting below previous daily or weekly highs and lows as well. And then what we need to do is we need to give ourselves a set of entry criteria. This on a 5 minute, for example, we get our sweep, we get our shifting structure. When we have that shifting structure and price closes down below, do we have an order block? Yeah, that we can target. And we can see what's great about this one is this already has validity. Why? Because price has driven into this here and then seen an immediate reaction. That means that we can kind of get firsthand, see the sell pressure that's there. Now, I think it was Erica last week or maybe the week before asked me a really good question about when I would invalidate this. Yeah. So we can see price didn't actually trigger until we were over here, right? So how long will I leave these orders standing? Well, I need, if my first liquidity target is reached, which would have been this, yeah, then I would have pulled these. So basically, had price done this from here, had gone down and swept that low and then started to recover, I would have pulled these orders. Why? Because price has swept internal liquidity, right? Low of session, meaning that then when it's heading back up, there's still a chance it could then target liquidity above the high of session. The fact is, and this is what's beautiful about this one, when we came down to here, what the whole time this was intact, this remains valid for me. Yeah, I would have been a little bit more worried if we'd started to close above it here, but actually seeing these long downside wicks here, really encouraging. Then when we close back below, you're then pretty certain that your liquidity is going to be hit. And what you can do to mitigate the risk even further is you can always move your stop loss to entry when you hit your initial target. Yeah. So, look, guys, I hope that's been helpful. It's been loads of people on the stream today, a lot of new people tuning into this one as well. And obviously, everybody is really, really welcome. It's been really great to see some new faces on here, and it's really, really always just such a really, really big pleasure for me to see all of our returning patrons that we have. You know, so many of you returning here once, twice a week to listen to me ramble on about this. So, Erica, thank you very much. You're always here as well. Nick, the same. Hans, my good friend. Enjoy those cold castles for me, mate, and that beautiful weather. Hasta la vista, Barbie. It was great to see you on here as well. Mert, thank you very much for popping back in. Yakuza Kano, always a pleasure. Argal Hussam, apologies for pronouncing the name wrong, but it was really lovely to have you on there as well. And thank you very much for the compliment. Lovely Kelly Barker, all the way from New Zealand, staying up to the early hours, truly burning the midnight oil. Nemesis, greetings from the UK as well, back to you. Thanks for dropping by the stream today. Pisket as well. Johan, our new friend from South Africa, that beautiful country. Burned as well, brilliant to see you on there. Craigie boy doing everything he can to make the most of his lunch breaks and get as much knowledge on board as possible. Moral, brilliant to see you on there as well, mate. Thank you. Greg Carnus, great to see you on the show. Hope you do come back. Hope you liked what you saw today. Obviously, feedback is always welcome. Our good friend MM, been a friend of the channel for a long time, as has Wak Shah, our friend over in Singapore. So look, guys, I'm really, really sorry if I missed anybody out. But it's always a great way for me to start the week with you guys. I'm going to go and take a short walk with the dog now so that I can get back in, fresh head, and then just very quickly, let's take a little brief gander here, shall we, and say to ourselves, okay, I did this one this morning, by the way, on NASDAQ. Again, same principles, right? We took out high of day here, nice session run, took out that swing low, closed below, returned into the order block. Beautiful, right? So for me now, what am I monitoring? I'm looking at session lows, yeah? So this so far is our low of day, and I'm just saying this just to leave you with some actionable setups as well, rather than just obviously all being theory based. And then we have our high of day up here, very similar to like what we're looking at with BTC. I think if we're looking at either of these getting run, then, you know, we can be in shape to kind of look for a decent reaction here. You know, for example, something like this, we get in there, get that recovery, and then all of a sudden we can look for this to be a platform to take us to the next viable liquidity. We wait for our shift in structure. Yeah, then we look to target an inefficiency in here or either the order block, etc., and look to move higher. But for me, that's where my alerts are going today, high and low of day, and I'll be looking for the same on Bitcoin as well. All right, guys, have yourselves a fantastic week, and I'll be back with you all on Wednesday.